Great. So, welcome back, everyone, and thanks for tuning in. And for those of you who just joined us here, be it on AirMeet or YouTube, thanks again for joining us on this event today. So, our next session will be a panel discussion with the theme Changing the Ways of Life Beyond Greater Jakarta through B2C Solutions. Here with us today, we're fortunate to have Umang Rustagi, CEO of Credivo and Deputy CEO of Finaxel, Anderson Sumarli, co-founder and CEO of Ajaib, Gunawan Susanto, country manager of AWS Indonesia, and Jonathan Barkey, group head of corporate strategy of Gojek. The panel will be moderated by Joji Thomas Philip, founder and editor-in-chief at Deal Street Asia. And if the audience has any questions, feel free along the session to submit your questions in the Q&A box, either Meet or also on YouTube, and we can address during the Q&A time. So now I'll hand it over to Joji to kick us off.
Thank you so much, Nadia. Welcome. Earlier in the all of you have heard about the potential of Indonesia. You've seen details of the report that was launched this morning by Alpha JWC and AT Kearney. And after some heavy-duty data and insights that you've all been listening to, I'm sure many of you must be thinking of lunch, but my job is to make sure that you're all engaged and have a great session before you head off to lunch. And believe me, I think we have the best panelists to keep you all engaged and to give you fascinating insights. And we have the best mind from some of the leading Indonesian companies that define the country's startup ecosystem. And we're going to be talking about the change, just as Nadia said, we're going to be talking about the changing of life beyond Greater Jakarta through B2C solutions. Nadia already introduced our panelists. We have Umang, Anderson, Gunawan, and Jonathan. To begin with, I'm going to be asking each of the panelists to introduce, maybe take about 30 seconds to 1 minute and introduce themselves. I think that's the best way to kick off. Who wants to go first? Umang, you want to go first? Umang, you're muted, I guess. You're on mute.
Sorry for that. Yeah. Hi, everyone. I am Umang Rustagi. I'm the co-founder and deputy CEO for Finaxel and CEO for Credivo. Now, Finaxel is a financial technology company that was started about 5 years back with a vision of building mobile-first financial services that are affordable, fast, and widely accessible, and provides a amazing customer experience to its users. We started this journey with our flagship product, Credivo, which is a leading buy now, pay later solution for Indonesian millennials to shop online, offline, or take a cash loan. In the last 5 years, we have actually partnered with over 350 e-commerce platforms, over 5,000 offline stores, and today serve millions of Indonesian millennials for their buy now, pay later needs. And then over the next 4 to 5 years, our vision is to actually serve more than 10 million customers in Indonesia and in the region. So yeah, that's about me and Credivo.
Thanks, Umang. Anderson, please go next.
Sure. Hey guys, thanks a lot. I'm Anderson. I'm co-founder and CEO of Ajaib. We are low-fee investing for Indonesia. We offer stocks, mutual funds, ETFs, and various other products. Kind of our mission here is to welcome a new generation of investors to modern financial services in Indonesia. We're a very young company. We started just in 2019, but we're today already the 4th largest stockbroker in Indonesia by trading frequency. We're targeting a very young millennial segment, and so I think it'll make for a pretty interesting discussion today in the panel.
Thanks, Anderson. We have a lot of questions for you on, especially the millennials and what you're doing to get them to trade. Jonathan, why don't you go next, please?
Sure. Thanks, Joji. Hi, everyone. My name is Jonathan. You can call me JB. So I've been with Gojek for about 4.5 years now. Previously, I was with North Star Group, so pretty much saw the company grow from Series A all the way to where it is today. I lead corporate strategy. Corporate strategy is both internal and external facing function. So I focused on a lot of the internal budget management, as well as business planning, and as well as some investor relations and fundraising. So very excited to be part of this panel.
And finally, Gunawan.
Hi everyone, my name is Gunawan Susanto, and happy to support Indonesian customers, especially the startup communities. AWS has been serving startups ecosystems in Indonesia since 7-8 years ago, but our office is just started in Jakarta in the 2018, and we're starting to invest and building the team locally here, as well as the most exciting one, we're going to launch our regions in Indonesia so that we can help to drive hopefully the more innovations for the startup ecosystems in Indonesia, and hopefully the bigger picture also that we want to contribute a lot more for Indonesian economy.
Yeah, thank you to all the panelists for the quick introduction. Before we begin, I just want to set the context, give you some one of the picture numbers. Experts estimate that the GMV of Indonesia's internet economy, that's at about 40 billion in 2019, and that's estimated to touch about 133 billion by 2025. Indonesia by far is the largest digital market in Southeast Asia. That's about, and contributes anywhere between 40 to 50% of the total digital market for Southeast Asia. And the best thing is Indonesia's digital journey has just begun, and it's got a huge potential to grow. So in that context, I just want to all of the panelists after their introductions, just again maybe to take a minute or two and talk about the potential, a big picture, the potential that Indonesia offers for each of their respective companies. Like I said, because Indonesia is equivalent to the rest of Southeast Asia combined. So how big is the Indonesia opportunity for all of you? Jonathan, I'd love to start with you. You meaning Gojek is by far the most valuable internet startup that has come out of Indonesia. So happy to have you go first.
Thank you, Joji. So I think first kind of like level of sort of understanding that we typically have with our investors is that Southeast Asia is a collection of so many different diverse cultures and economies, right? I think Southeast Asia as a whole cannot be classified as one because there's so many divergence in that culture and economics kind of like level, demographics, right? And so when we see Indonesia along with countries like Vietnam and to an extent Thailand, they're in a similar cluster where there's a very unique opportunity where the demographics are very, very favorable, but infrastructure has been nascent. And so I think the way we see it is that for digital technology, that's the most ripe circumstances for us to be able to serve the customers and serve the ecosystem. With that said, I think when we think about Gojek, Indonesia's home. Indonesia is our crown jewel. And I think the way we see it is that we see Indonesia as not just a single vertical play. We see it as a platform opportunity. We see Indonesia also, we believe that an ecosystem needs to have all the different pillars move in unison to be able to fully unlock the flywheel and the opportunity that technology brings. And I think maybe I'll leave it at that and let my other fellow panelists build from that.
Thanks, Jonathan. But before you were just a quick follow-up question, because during the introduction, you also said you handle a little bit of fundraising, dealing with investors and all of that. You have some of the most diverse set of global investors on your cap table. Everyone from Tencent to Facebook to WhatsApp to
strategics to financials,
yes,
Chinese investors to North American, yes,
North American investors. Yeah, some of the biggest names in the world. You just spoke about the potential and the platform approach. Is that what they saw in Gojek when they sort of when they put capital into Gojek?
Absolutely, and they never limited us to a single playbook or a single strategy. I think they let the management team really assess and think about pioneering innovation to be able to address and serve fundamentally the customers in the ecosystem. And I think that's a testament to our board, our shareholders, who have been extremely supportive for us to be able to adjust and make moves that are best for the countries and the markets we serve.
Yeah. Excellent. Thank you. Umang, can I come to you? When you look at Indonesia's unbanked population, that's about 180 million people. So be it the country's unicorns, be it the fintechs, the startups that are in the lending space, everybody is targeting the unbanked population. With this regard, how much potential do you see, especially for sort of credit lending in a market like Indonesia?
Yeah. I think the potential is huge, right? And let me share some of the numbers with you, right? We look at primarily the unsecured lending opportunity, and credit card is a good proxy. So Indonesia is a $1 trillion economy and has about 70 to 80 million people in the middle class, but only 7 to 8 million people have credit cards. At max, 10 million people have taken a loan from a financial institution. So out of a credit-worthy population, only 10% have access to credit. Now, the access is actually limited by, as Jonathan was saying, by the credit infrastructure, lack of digital KYC, lack of digital credit bureaus available. And if you are able to build a digital first, mobile first solution that is able to build beautiful digital interfaces to lower the cost of customer acquisition, if you can leverage a lot of digital alternate data, you can actually serve a population which is in access, a significant majority of that 70 to 80 million people. So if someone is able to do that, I think the potential and the opportunity is huge, because as Indonesian middle class, as Indonesia becomes a middle income country, the demand for credit tends to spike. Now, traditional financial institutions are not able to fulfill that demand because of these challenges. So this is where the gap is and the opportunity is for digital fintech players like us.
Got it. Umang, quickly, you spoke about how for example, the credit card penetration is very low in Indonesia. I just want to ask you, that means and because you also said only 10% of the population have access to credit. So addressable, which means that the number of people with a traditional credit score, much like some of the Western markets, must be very, very low in Indonesia.
Yeah.
So since people don't have, especially in tier 2, tier 3 cities outside Jakarta, when people don't have a traditional credit score, what are the big opportunities that throws up, not just for companies like you, but even for the likes of Gojek?
So I think historically, I think the entire credit scoring model has been developed and essentially copied from the West, where credit bureaus are much advanced. They have been there in operation for 50 years and cover a significant population. So when these models are essentially adopted in emerging markets like Indonesia, they simply cannot be just copy pasted. And what has really happened in the last 5 years is, with the smartphone penetration significantly increasing, the digital data being significantly enhanced, there is an opportunity to mine that digital data, whether it is data from telcos, data from smartphones, data from e-commerce shopping, ride hailing. And these are all very high frequency predictive data that's available for basically building a credit score. So essentially, we have to move from an approach we are only looking at a limited traditional credit score to a more enhanced digital credit score, using all these different data points that are essentially available today to mine in real time. And with cloud technologies becoming accessible, it becoming cheaper, it is the barriers to entry to actually mine, store, and actually build a highly predictable credit score is actually becoming more and more possible by the day. So I think with that, there is I would say, a opportunity or a way to address that market that's actually emerging. And that's where we are essentially doing. And there is a lot of opportunity for others to also do. Embedded finance is obviously a big upcoming area. For example, for the likes of telcos or likes of ride hailing, who have a large customer base and a lot of transaction data that's available, it is becoming possible for leveraging that data to essentially start giving small credit limits or essentially lending solutions using that data.
Got it. You spoke about a lot of opportunities, not just for you, but others too. So before I come to Anderson and Gunavan, I just want to quickly ask Jonathan one more question.
Yes.
Jonathan, what's the opportunity for Gojek in a market where very few people have a traditional credit score?
Yes, and I think I want to build on what Umang was describing, because when we think about the opportunity in digital consumption, first is we want to facilitate consumption. Because I think even like Umang touched a lot about the credit statistics of Indonesia, but I think what folks also need to understand is that even the ways of transacting has been very cash dominant, which is, as we all know, extremely inefficient and high friction for the customer experience, right? And so first, facilitating payments is step one. And this is something that we've seen. I remember, the day that QR codes were approved by BI in mid 2018, that was supposed to be the inflection point of digital payments. And we are still at the tip of the iceberg. Obviously, COVID in 2020 has pushed certain verticals like the digital use cases, and perhaps offline use cases took a half step back. But I think we see that this facilitation of transactions is still step one. Then step two, as Umang mentioned, all of that can be mined, can be mined and processed to be able to build models to increase access. I think access is the key word, which we'll talk about a lot today, especially as we talked about tier 2, tier 3 cities in Indonesia, and we talk about credit. And then the third, which is super exciting to hear from Anderson, is then how to grow their wealth. Because I think this is like the three phases of how customers think about their overall digital finance opportunity.
Got it. Yes, access is something that we will touch upon in detail going, later this session. So Anderson, sticking to opportunities, I just want to come to you. Thanks for waiting, but slightly changing track a bit. When it comes to stock investment, just like what we were discussing so far, that is also has seen a very low penetration in Indonesia. Some numbers say that only about 1.6 million, there are only about 1.6 capital market investors in the country, which is less than 1% of the population compared to a market like in the US, where anywhere between 55 to 60% of the population own stocks. And even within this small segment of Indonesians who own stocks, millennials make up 70% of that lot. How do you explain this change where it's the millennials who own a bulk of the shares that Indonesians have?
I mean, first of all, let me lay out kind of the opportunity for investments in Indonesia.
Sure.
So our country is amongst the largest capital markets in the world. There's over $500 billion in market cap in Indonesia. Yet less than 1% of our population, as you pointed out, is invested in stocks. So this is a nation of more than 250 million people. GDP per capita of over $4,000, which is more than twice that of India. People obviously do have wealth. But the question is, why are they not invested in stocks or other capital markets products? So we at Ajaib believe that Indonesia is the largest capital markets of its kind with the lowest investor penetration in the whole world. There's no more precedence of this anywhere else aside from Indonesia. And so, when you talk about the untapped market or the segment that's underpenetrated, we have a 99% population that's underpenetrated that's never touched stocks before. Now, when we talk about the millennials, I think that it's actually a function of the rising middle class moving towards higher yielding assets. And it just happens that in Indonesia, such a young nation, that majority of this middle class is comprised out of millennials. So I would actually argue it is more driven because of this middle income segment. In a country like Indonesia, where you have low savings yield, most of the banks gives you 0.25% interest per year, and an inflation rate that is pretty high at 2 to 2.5%, depending on the month. You see that this middle income segment are pushing more towards a bit more risky assets that yields higher returns that can beat the inflation rate. And this is not just a trend that's exclusive to Indonesia, but it's also a trend that we've seen played out in India, China, Brazil, and basically every other emerging market, and is especially true during the pandemic, where you do see dropping savings yield. Savings yield that's really very low to begin with, right? And there's concerns obviously over inflation depending on government policies. So, that's how I would put it. I think that we're at an inflection point right now. There's this interesting trend of middle income segment, majority of it, which are millennials, pushing towards these higher yielding assets. And, we're just incredibly honored at Ajaib to be, to welcome a lot of these first-time investor millennials to participate in capital markets.
Thanks, Anderson. Just a quick related question. You can take it first, and then if any of the other panelists want to take it, can take it after that, because you gave us some stats and numbers on how that Indonesia being perhaps the most unique market in terms of the wealth. Very few people or a small segment, 1% of the segment actually investing in the markets. In this context, Indonesia has created several unicorns, several as per the Alpha JWC Kearney report, several more will be created in the future. The IDX has been talking about dual class shares, which could potentially lead to many more unicorns listing, Indonesian unicorns listing there. Do you see such a move having a potential to create wealth where the masses can also participate?
Absolutely. So I actually believe that capital markets is the ultimate tool to democratize finance for all. It literally is. Basically, any retail investor can go buy a stock and participate in the benefits of this high growing nation that we're in, by virtue of the valuation increasing in the stocks due to faster consumer adoption and other positive things that come with high growing nations. And we've seen this happen in China, and we are seeing this happen in India. And so, I think part of me really wants to encourage some of the peers on this panel, as well as those that might be listening, to also list in the Indonesia Stock Exchange. But I think another part of me to appeal, I guess, to them is to say that, look, you have such a young nation, and Joji, as you pointed out earlier, majority of the retail investors today in Indonesia are millennials. These are your consumers as well. This is an opportunity for you to build, brand loyalty, where your consumers are not just using your products, but they're also investors in you and want to see you succeed. So part of me wants to appeal a bit to their greed as well, to say that this is an aligned interest for both. But another part of me believes that it's a social responsibility to actually allow for the masses to also participate in your success, given that you are in Indonesia.
Yes, thank you. And I'm sure both the appeal and the fact that it's a social responsibility to allow the masses to participate is well taken by our listeners. Anybody else wants to take any comments here? Jonathan, especially because you are the largest decacorn, or worth over 10 billion. So I'm not talking specifically of Gojek, but the larger issue of allowing dual class shares, which would potentially see many companies listed in Indonesia, and what that could lead to.
Yes, thank you, Joji, and thanks, Anderson, for laying the jelly beans for us. But I think what's fundamentally important for all of us as Indonesia-focused, Indonesia-based companies to kind of band together and understand is also that I agree completely with the democratization of wealth creation that Anderson mentioned, because we want the masses to be able to participate in the segment that will grow to be at least half of overall public markets. We see this in the US, we see this in China, as Anderson mentioned, right? But I think another point that I also want to touch on is that wealth creation will also depend on which companies end up building the ecosystems, right? So for example, if we look at the key verticals, the e-commerce verticals, digital payments, a lot of the companies that are serving these, and ride sharing, of course, a lot of the companies that are serving these verticals are also foreign companies, right? And I think those foreign companies are listed in different exchanges around the world. And I think we as sort of Indonesian business leaders also need to ask ourselves that question of, how much do we want to have a local brand, a local company, to be able to participate in that wealth creation and to open the gateways to a lot more to follow? And I think this is a very unifying spirit that the IDX has taken a lead on and taking that charge forward, Joji. And so I think everybody shares the same mind, everybody shares the same aspirations, and we hope we can open those floodgates for all the Indonesian companies to have access to capital, but also to give customers, stakeholders, and the retail investors access to wealth creation.
Thanks, Jonathan. We're all waiting for the Gojek IPO. When it happens, which we hope potentially will open the, like you said, the floodgates. I want to just shift gears completely for a bit because and come to Gunawan. You've been listening in, Gunawan, to all of these conversations, but I just want to take a different line and ask you your views on a couple of points. The World Bank report in 2020 published last year said that there were at least 52 million economically secure Indonesians making up the middle class in the country. And this is sort of expanding by about 10% every year. There was another report by AWS titled Unlocking APAC's Digital Potential, in which you said that talked about the changing digital skills and the policy requirements. The report found that only about 19% of the Indonesian workforce were digitally skilled. And also added that Indonesia needs about 110 million more digital workers by 2025. And the fact that an average Indonesian worker will have to develop at least 7 new digital skills within the next 5 years to keep pace with the technological advancements and demand. So my opening question to you is, how do you see this play out?
Yeah, thank you for the questions, Georgie, and apology for my internet connections disruptions. So indeed, it is a really heavy lifting that needs to be done, right? Our study found that the 59% of Indonesia digital workers is actually who are not applying the cloud computing skills today. They believe that it will be a requirement to perform their jobs by 2025. The cloud architecture design, cyber security, large-scale data modeling, web development, game development, software operations will be the fastest growing skills in demand by 2025. And bridging this skill gap requires the intentional and sustained effort by all the ecosystem players, right? Be it the private, public sectors, and we've been working, collaborating with the education institutions, industry organizations, and of course, its government, with the local skilling initiative to help students and workforce keeping pace with the technology advancement. We provide currently a range of free training opportunities. So for the vast majorities of people wants to develop their skills and they want to self-paced learning, we have more than about 500 free courses, including the interactive labs and virtual day-long training sessions that are accessible through AWS training and certifications. And for those who needs that localized in Bahasa Indonesia, we also have this developed for the past 12 months free digital training library that includes 80 courses. It's already been localized for our customers or organization who wants to develop their people with the more on the in-person virtual classroom training courses. We also provide that accredited instructors for the people that wants to reskill or upskills their organization, the organizations, and train their employees, right? And recently, I think we also happy to share our collaborations with the Decoding Indonesia. Together, we develop a cloud and back-end developer scholarship program. We'll just launch it 15 March this year. And the aim is to equip Indonesians with the skills and knowledge to fill and advance the back-end developers professions in the country. And you can access this through aws.decoding.com. And last but not least, for the remaining students who wants to understand about the cloud career pathways, we also provide that the online learning access so that the people can or students can learn about how they want to build their skills to become a cloud engineer or cybersecurity specialist, machine learning specialist, or data scientist.
Interesting. Sorry, there was an echo. Thank you. Thank you. So it was interesting to hear about AWS's role in especially accelerating the training efforts of building the future workforce that could perhaps, that will definitely help advance in the Indonesia 4.0 vision. But just a add-on question to you. You gave us sort of at the customer level, but I'm just sort of stepping out. Technology needs to be accessible to all, and Amazon has been talking about things like person to machine interfaces that make tech more accessible. I think in December last year, the Amazon CTO Werner Vogels, like in a series Now Go Build, he talked about Indonesian farmers. So be it agriculture, be it fishery, some of the other sectors. How much of a role do you think tech will play in helping Indonesia address some of its key challenges?
Yes, indeed, Indonesia is very exciting, right? We go out of our doors and we can see a lot of aspects that need help and solutions, in which we are seeing Indonesian startups passionately iterating to solve these issues, right? And their passion and energy really inspires us in AWS. So at the AWS, we work every day with the country most innovative founders to support them building and grow technology-led businesses designed to solve these problems, right? Which that matters for the communities across the countries. People like, of course, Umang with the Credivo is, providing the access of credits or financial to, the not unbankable people. These are some of the examples, right? And like Ajaib as well, and the Gojek in this panel, and many other vertical industries. And they know the best on the business side and the subject matter expertise from, the business point of view. AWS is supporting them with the tools and the technology to create new access and the new to create the new access and new business models. So that, with these technologies and tools, which is they are not constrained by the traditional practices, we do see that is, we want to support these founders to be able to accelerate and growing in many other and solving the problems. And at Amazon, we call this as a day one thinking, looking at the possibilities instead of the limitations based on how things have been done. And a couple of other examples, close to the recent situations like for the past 12 months on the pandemic, like health tech, how we are supporting Halodoc since the beginning of their journey. And for the last 12 months, how they are leveraging AWS Cloud to be able to quickly launch a new services like doing a rapid test, online care, up to registering for the vaccinations as well, right? The other examples were, in the supporting people work from home, the people needs to buy the groceries, day-to-day needs online and send it to their homes. Companies or startups like Happy Fresh and Sayurbox, they are leveraging AWS technology as well. Some of the capabilities so that they are not only be able to scale and addressing the requirements from the customers, but also helping the customers to easier access to these services. And at AWS, we are committed to support this advancement and helping Indonesian builders to create, successful startups that will benefit to our society.
Yeah, thanks. Very interesting. It's good that you mentioned the pandemic because it is just a matter of time that came up and it's dominated the conversations everywhere globally for the last year. So I just want to bring that context in and look at some of the big picture because not just for Indonesia, I think for the whole of Southeast Asia, 2021 and beyond will perhaps be we'll see the biggest era of a digital reset. Over the last couple of years, internet consumption and smartphone penetration has been growing in Indonesia, but not really online transactions. Startup had to lure customers with discounts, cashbacks, and project to their investors of the bright future that Indonesia holds. I want to understand from each of the panelists, how has the pandemic change this. Has it created a willingness in consumers to experiment, especially those in cities outside Jakarta? I also want you to tell our audience, like, what do you think? Are we entering an era where consumers are finally tracking ahead of firms in digital adoption, where they're ready to pay, where they're ready to transact, even in places, cities and provinces outside Jakarta? Jonathan, what's your take?
Sounds good, Joji. I think a way to describe what the pandemic has done is that it has, I think reset is a great way to put it, as you put it, Joji. I think the way we see it is that it's zero-based the whole competitive landscape. So what's happened is, so Indonesia's inflection point of digital smartphone adoption was about 2014, 2015. Since then, it's been like a 5-year blitz scaling of the various platforms, and there's been a lot of sort of band-aids that had to be put in, right? You mentioned subsidies, incentives, etc., both on the demand side, supply side, and everything structural, right? What the COVID has done is that it's sort of zero-based that competitive landscape where everyone's had that moment where, okay, let's turn all the levers off, let's turn the market organic, and let's see where we come out. And I think this has been the biggest sort of like breakthrough for for technology, where we've realized that the market is extremely resilient, it's extremely organic, and if anything, is growing from strength to strength. I think this is everything from the consumer side when you look at monthly active users and transacting users, as well as on the merchants and supply side. For us, we see significant behavioral changes on the merchants and driver side. Previously, it was very costly for us to adjust from a concierge model. So for those that are not based in Indonesia, previously our drivers would go into restaurants as customers, pay for the orders, front for the orders for the customers, and then complete the transaction. But today, 90% of our orders are fully sort of merchant accepted flow. This required significant merchant adoption, merchant compliance, and the merchants to rejig and rethink their SOP, because now the cashiers and how they operate completely changes. But this mindset shift, both on the merchant side as well as the consumer side, is so significant where it completely changes the structural economics of the ways of doing business and the unit economics of the space. So I think that's a significant breakthrough, and without jeopardizing top line, it's been a significant breakthrough for all the technology players in the country.
Got it. If we look at the significant breakthroughs like Jonathan had mentioned about Gojek, but if you look at the similar breakthroughs for companies in your space, some of the things that consumers have been adopting, be it, let's say, frictionless micropayments or auto debits, buy now, pay later, embedded lending. Do you think all of this, looking beyond, do you think these have the potential to create a new cycle of consumption for Indonesia?
Yeah. Well, I think as Jonathan was mentioning, right, I think what COVID has really done is that it has accelerated digital adoption. So I think the digital adoption was always it was happening and it was happening for the last 5 years, but it was happening through either subsidies or just natural adoption. And the wave one of that digital adoption was e-commerce, ride hailing, payments. And that had already happened in tier 1 and it was moving to tier 2. Fintech, the second wave, which is let's say fintech investment, were basically starting to take shape in tier 1, and then they were essentially yet to break through in tier 2, which was the second wave. And the tier 3 basically is the health tech and the ed tech, right? And that's how, at least I see how their whole digital wave was actually progressing. What COVID has really done is that accelerated that trend across all these 3 waves, where e-commerce, ride hailing, payments have become mainstream in both tier 1 and tier 2. Fintech has become mainstream, let's say tier 1, and is now starting to accelerate in tier 2 and tier 3. And tier 1, health tech and ed tech are coming in tier 1. So as essentially the customer becomes more and more comfortable and starts adopting the wave 2, which is on the fintech side, we will start seeing a lot of companies essentially also addressing that need by building solutions for addressing micropayments, making the whole payment experience easier through buy now, pay later or auto debits. So I think this is just a way where now the customers have really realized that, hey, there is a real need for this. COVID has really shown them the or accelerated that trend. And I think now the companies are basically building solutions to address that. So this is definitely going to, I would say, unlock a lot of new consumption behaviors that would have happened organically but would have taken longer. But COVID has just accelerated that trend. And a lot of that will stick even after COVID.
Got it. Interesting. And Anderson, let me come to you in terms of the COVID-led acceleration. The retail transactions, like what you saw on your platform, I read somewhere that it grew by more than 50x last year. If you look at the IDX boom, especially in the last maybe 12 months or 15 months, there are a lot of social influencers that are contributing to this, retail boom. We've seen some level of cultural shifts that where people in tier 2 and tier 3 cities are becoming first time, not just, and they have their respective families, becoming the first to own stocks. A lot of Indonesians are looking at social media for guidance. Like social media figures can actually move the markets in Indonesia. And these influencers have introduced a lot of new terms, like, and this is the first time I've been hearing of these terms like sangmology or mansumology or rafimology, a lot of these terms. So what's the COVID impact? Can you just take us through the COVID-led boom that you have seen?
Yeah. Well, I think that's a lot of questions put into one. So let me try to address them separately.
Sure.
I think there's a lot of interesting trends happening because of COVID. The first one, as I hinted at earlier, is this dropping savings yield and an uncertain inflation, right? That's driving people to higher yielding asset classes. I think number two is also because of this shutdown and social distancing, whereas the traditional way for people to be able to get an access to a brokerage account or some wealth management planning is to actually meet up these salespeople and be present in their offices. It's suddenly no longer possible, right? And so this pushes solutions like ours, that's mobile first, fully online, to step into this gap, right? But I think there's other interesting trends that's also happening here, where you have a bunch of people who are just staying at home, and maybe some of them were unfortunately affected economically because of the pandemic, and they're looking for ways to make side incomes, right? And there's very few ways to do it from the comfort of your own couch these days. And so you see people start dabbling into all these investment products. And particularly in tier 2, tier 3, we have seen that there is sizable growth and shift between our users coming from that from those regions. And a large part of this, in my opinion, is that, look, Indonesia as a culture, I would argue, is actually one that has embraced investments since a very long time ago. It's just that they have invested in land, they've invested in livestock, they've invested in gold, everything that's basically not capital markets related, right? So really what the shift is happening in these tier 2, tier 3 cities are actually shifts from the traditional investment products moving into more formal investment products in the form of capital markets. And majority of people on our platform, they are the first amongst not just their family to invest in stocks, but also amongst their friends to invest in stocks. So imagine being in a country with only less than 1% of the population invested in stocks. You're probably immediately the genius amongst your social networks when it comes to investments when you make your first trade. And so it's pretty natural that a lot of them look for others that they can relate to in the form of social influencers to inform their decision making. So we at Ajaib have really taken a cautious approach at this. We recognize that social influencers are an integral part that cannot be avoided in a country like Indonesia, where we're so social media savvy, right? But at the same time, again, they also have the social responsibility to ensure that they're educating the right message to these first-time investors. One thing that we've done to balance that out is that last month we announced a landmark partnership with the Indonesian Stock Exchange to run education campaigns with them. So join together with the regulators and the government in order to run education campaigns in regions that have low financial literacy, where IDX has branches, offline branches, to go and meet them in person, right? So No, I think that overall, I think there's many interesting shifts happening because of COVID. I think that this means a new generation of investors that have never invested before, and they become kind of the experts in investments the moment they do start investing amongst their social circles, and they're looking for direction. And we gotta be very smart about how we're educating them so that they're not just sticking around for the next 1 to 2 months of a stock market boom, but also for the next 20 years of their lives.
Well, okay, I didn't know it was that many questions combined. Thank you for taking all of them together. I was just trying to piece together the big picture view. Guruman, let me just come to you. Sticking to the same thing, but I want to look at the people aspect. It's given that COVID has led to immense digital disruption. And this trend is just we are in just the early phases of what can potentially lead to mushrooming of digital first businesses over the next couple of years. But on the people side, we've also seen a lot of professionals come back to Indonesia, be it from the US or be it from Singapore or other markets, and take the plunge to go and start companies. You spoke about how you interact with a lot of startups in Indonesia. In that context, with considering that the country has massive smartphone user base, this falling data costs, it's a growing economy. How do you see the country poised for the digital disruption? Do you see a lot more digital first businesses coming up and infiltrating every sector of Indonesia's economy?
Yeah, definitely, Georgie, because I think hearing from Jonathan, Umang, and Anderson, right? So in many aspects, the changes is actually required, right? The new business model, the new SOP, the new way of interacting with the customers, the new way that we're delivering our services to the customers, and also interacting with the suppliers, partners, including the new way of defining our internal processes, the staff, the productivity, and so on and so forth, right? So with these changes, a lot of these bright minds or the bright brains coming into Indonesia as well, and they are stepping into filling in the gaps, and definitely it's very exciting one. But we do see that is having these great ideas, the great passion is a half a battle, right? The other part of the battle is how can they exactly delivering and operationalize it, and using the technologies, and how they can finally release the solutions or the products or services to solve these kind of problems, right? And most often what we have been hearing from our customers is the worry about the costs for them to experiment in the technology. Well, the good news is with the cloud computing, the cost definitely it's much lower in terms of the initial investment and the ability to access this kind of technologies compared to before, right? And quoting that from a VC from Silicon Valley, Mark Anderson, has said that with AWS Cloud, it has helped to lower the cost of running a basic internet applications from about 150K per month to just 1,500 per month, and that's a huge difference. It's 100x difference, which means it's easier than ever before to launch a tech business, right? And the cloud actually with these economics, de-risking the growth process and ensuring a startups do not need to invest heavily in the tech side in the anticipation of the future demand. So they can basically start small and pay as you go whenever that they need it. And in a lot of cases, it's actually there is a lot of program and even like a free tiers program from AWS, so that they will almost zero out the initial tech investment, right? So the access to the technologies itself, no matter they're a big company or just a startups, it is actually open for everyone. So it's kind of like It depends on the creativity of the organizations on how to leverage the technology to drive these new innovations, right? And democratizing is the key, right? So that we want to really democratize the access to the technology. And the second one is actually what I'm seeing that is actually will also help to drive, the growth of these people, the startups in Indonesia, where the ecosystem now it's more than before, where we have been thanks to our team and many who have real world experience that contribute to the startup processes. We also working with the venture investors like Alpha JWC, the incubators, co-working spaces, so that the startups are not alone when they're starting their businesses. They can have an access to mentors, they can have the access to the co-working spaces, and also the team like AWS who is supporting them and advising and providing the access to the technologies to the early stage startups like them. And last but not least, even though this is still, I believe that is a lot more need to be done, is the access to the skills enablement, right? It's never been, it's compared to before, it's never been easy to access these technologies, skills, right? And we invest heavily, like I mentioned before, in the skill development for Indonesia, even though we do believe by learning more about the requirements or the needs for our developer communities in Indonesia, we do want to bring in more skills into this country so that people will be able to access, be it digital free online training or a custom the virtual and instructor-led trainings, working with the universities, local partners, and building the capabilities, be it from the very foundational like a cloud practitioner skills up to the level where machine learning, cybersecurity, IoT, right? And for that, all these three reasons, we absolutely agree that Indonesia is coming into an era of extraordinary digital advancement, and we are committed to support the growth for our country, innovative business ideas across all industries, all aspects.
Thank you, and very interesting. And the VC that you mentioned, Anderson Horowitz, they came up with this famous note last year, which I'm sure all of you have read, including everybody in the audience. A note titled "It's Time to Build," which is what we're going to be talking about next. Just want to change the conversation to the report that was released this morning by Alpha JWC and AT Kearney. One big talking point that stood out for me, at least in that report, was it talked about despite the increasing economic might in Indonesia, it mentioned that when it comes to tier 3 or tier 2 cities, both tier 2 and tier 3 cities, they're about 3 to 5 years behind a tier 1 city like Jakarta for digital adoption. The other interesting point, and this was also mentioned in this session, was Indonesia's GDP. That's about over $4,000, which is double of that of a large market like India. And the demographics, half of Indonesia's population is below 30. It has close to 200 million internet users. But much of the online spending is still driven by tier 1 consumers. I want to ask the panelists, how do you see the ecosystem pan out? Because the needs of tier 2, tier 3 consumers are going to be different. It's going to be, they may need it in their local language. They may need content that is structured and tailored differently. They're more interested in jobs. They may have a very thin wallet approach compared to, say, Jakarta. So, Jonathan, I would love to start with you. For a company like Gojek, which is across every sphere of a life of an Indonesian, are you looking to sort of build distinct business models that meet the needs of people in tier 2 and tier 3 cities?
Joji, that's absolutely spot on. The tier 1 cities are still predominantly where the consumer spending is. I think the Alpha JWC and AT Kearney report outlines that really well. I think this is also infrastructural. So I think a word that all of us say a lot, but haven't had a chance to mention, is Indonesia's an archipelago, right? And that means that there is very sort of like separated clusters of hyper-local environments that you need to address. And so what happens is that, so there's two steps. First is tier 2 cities, so outside the top, call it like 10 cities in Indonesia. And then the next step is beyond Java, right? So that's like the two elements that is at play on the ground in Indonesia. When we think about cities outside of the tier 1 cities, I think the issue there is that there's not enough density to create an ecosystem that has the network effects that benefits a technology platform. And so I think the way we see it is that that's where the next wave of growth is. I think we have to be a first mover into those markets. If you build enough of a network effects and an ecosystem, you would be able to create significantly loyal and retentive customer base that will yield much longer term kind of benefits to the platform. So I think the way we see it is that it's a question of when rather than kind of like how. And I think the most crucial part is actually building out the infrastructure, because these consumers, they either want to buy something, they either want to go somewhere, or they want to it's a consumption driven sort of use case. And so I think we need to provide the supply and the access for them. And a lot of this includes kind of extending supply into these cities. So I think you all may have heard Go Kitchen. So where we create cloud kitchens to extend supply from Jakarta and the greater cities into the secondary and tertiary cities, so that they have a efficient capital efficient way to actually access these markets. We also talk a lot about logistics, because logistics is where you then enable a lot of the e-commerce players, right? And you are able to move a lot of the inventory and the supply of merchants closer to the customers, enabling a much more cost-efficient way and for the consumers to consume. And so I think we see this as infrastructural expansion, and we're very excited to be a part of that, because a lot of the first wave, social media, digital penetration, these cities are just as rampant as any of the other cities. So it's just more of a question of the other use cases following that first wave.
Got it. Umang, for Credivo and you, when you look at either your company or when you look at operations of other companies, not just in the space that you're in, but in e-commerce or SME services, what do you think are the new models that are emerging that will minimize the friction, especially for consumers in T2 and tier 2 and tier 3 cities? Because friction was one of the report points out that one of the issues that stopped prevent some of these people from outside Jakarta transacting online is the friction that they encounter. So do you see unique solutions being built by companies in Indonesia to address this, and new formats being built, for example, discovery of products and services through a video, or or building videos on top of some of the offerings, or a whole sort of new service? How do you see it?
Yeah, it's a very interesting question, and I think as we see, right, I think the first wave, which is the e-commerce, ride-hailing, payments, I think they are the ones which are really innovating in terms of building differentiated business models on addressing that gap for tier 2 and tier 3 and basically scaling up digital consumption, right? And I think the next wave which is coming is essentially the fintech wave or the lending wave. Now, I'll take a few examples of what we did and how we are starting to look at this, right? So as we see that we obviously are the ones which are powering the e-commerce. So we see a growing demand of people applying to Credivo, requesting for a buy now pay later solution from these tier 2, tier 3 cities. So we see a growing demand for that. But the big challenge or constraint for us was there was no infrastructure, especially related to collections and payments, that was there, and which was essentially hampering how do we expand to tier 2, tier 3 cities, because as a lending product, you have to essentially be able to collect from the customers and make it simple for them to do that. So what we really did was about 2 years back, we actually completely revamped our product or changed our product, where we actually simplified the product a lot, because a lot of these users were first time users of digital payments, buy now pay later solutions. So we actually created a kind of a basic product, which was like I would say a starter product, where with limited data or limited documents, you could actually apply for a buy now pay later account. get approved for a small limit and do a like high frequency small ticket transaction. Because these are customers where we don't have a collection infrastructure. A lot of them don't have any data in the bureau. They're first time borrower. So you need a starting point to actually assess the credit history. And we see that a lot of people started signing up for these accounts. In fact, today, about more than 1/3 of our new customers are actually coming from these tier 2, tier 3 cities, where we opened an account for anyone in Indonesia can apply. If you have a basic KYC document, you can actually apply for a starting account with Credivo. And we see this driving a big change in terms of our growth and essentially user consumption. So when these users started essentially transacting, they build a credit history with Credivo. So now we are able to then essentially upgrade their account, give them a higher limit, so then they can do a higher ticket transaction. And that's how essentially by changing the product, we are essentially addressing that gap where we are actually going to the basics. The other significant thing we did was how do we make payment process easy for the customer? Because a lot of these customers don't have internet banking account. The ATM density in these areas may not be that high as in Jakarta. So we then tied up with offline payment channels like Indomart, Alfamart, where you can walk into their stores and essentially pay your bill. So a lot of these interesting things are actually essentially enabling us to start addressing the needs of these tier 2, tier 3 cities. And I see a lot of other companies in this area also starting to do that.
Got it. Anderson, let me sort of come to you. We've heard about the opportunities in tier 2, tier 3 cities. As I mentioned earlier, there's also a people element. You need founders to go out there and build these companies. You just closed a massive 65 million funding round earlier this week. Historically, Indonesia's challenge, I think it's not really lack of big ideas or lack of quality founders. They've had it. But it's largely to do with capital and timing. And is this perhaps the first time that we're seeing both capital and timing come together? Because companies like you're backed by a wall of capital. And therefore, to address these opportunities, is this the best time to be a founder in Indonesia?
Well, I think that is certainly the best time to be a founder in Indonesia, because I think that there's all these new trends coming up that we've been talking about all day, right? And the opportunity for a founder to come in with a technology-first solution is to ride on these trends. That is, I think, where you have a really interesting story to tell. And I agree with you completely that, you know, a founder can control a lot of things, but the one thing they can never control is timing. And so when the timing comes and the trend comes, you got to really be able to spot on it and jump on board. But I would push back a bit on kind of the lack of capital being the inhibitor. I actually think that the inhibitor is a lack of founders that's focused on the right products, especially when we talk about tier 2, tier 3. Like what Umang mentioned is you got to create unique products to speak to this market, right? And so I think, you know, it's the right time for a founder to come in, build a completely new product that speaks to these new trends that's coming out because of the pandemic, targeting the segments that's benefiting from it, whether it being a millennial, middle income segment, tier 2 or tier 3 cities. So, you know, I think it's the best time because it's a combination of shifts in the market that creates for really interesting new product opportunities to address new markets at the same time.
Interesting. Gunaman, just let me come to you. We've heard some fascinating examples by the other three panelists. But a key word that came up earlier in the session was access. And even in the report that was released this morning, it points out that some sectors like EdTech or even health tech, that is expected to grow 4x from 2020 baseline, outpacing the growth in several other sectors. So in this context, right, I wanted to ask you, like, even if you are a wealthy family in a small town outside Jakarta, often the challenge in Indonesia was you couldn't really access high quality education or you couldn't access high quality healthcare. But all of these sectors, be it the two sectors that I've mentioned, today you can, like, the quality, like if you're subscribing to an edtech services offered by an edtech startup, the quality of services is the same across all of Indonesia. If you're doing health consultations on video or on using some of the startups that are that are playing in this space, you have access to quality doctors. So do you see a lot of companies, people, startups, therefore, coming in to solve the problem of access and quality first and price only much later?
Yeah, I think first of all, listening to the other panelists, John, Umang, and Anderson, is the alignment is that is we all agree that is we still want to serve the tier 2, tier 3 cities consumers, right? Now the question is then in a scale, and the obviously coming with the economic of scale. So some industry can be easily just expanding the services going into the tier 2, tier 3 cities. Some others maybe need to define a new product or the new services, looking at the different challenges, right, of each of the industry dynamics. But I guess that is with this economic of scale itself, a lot of the startups will still think about, at the end of the day, it is about how to serve and be inclusive. That is, every Indonesians will have this same quality of services, same quality of they can get same like the tier 1 cities as well. So with that in mind, yes, there is some problems need to be solved, be it from the business processes need to be more agile, or probably be more creative. We can do it over the technology, right? So this is where we are seeing the capabilities of AWS, how we can actually supporting this. Even the one of the examples like HelloDoc, right? How to provide these capabilities and scaling to support as many as Indonesians in terms of connecting and supporting the testing of the COVID-19 or the vaccination and so on and so forth. At the same time, at the back end where AWS is supporting HelloDoc team to convert some of their technologies to be more efficient, so that they can, despite of the growth is 9x, the number of traffic that accessing the apps, we are supporting them to reduce the cost and providing them using the new technologies, the new capabilities, so that they can maintain the cost, right? So that will help them to be able to scale even more, and providing the similar access to the technologies. Similar to we are supporting like a Click Doctors as well, how we are actually helping them to reduce the cost by 20-30%, and that will be able to help them to expand. And in the education tech itself, of course, with the capabilities to growing the access for the schools doing the online school and so on and so forth. One of the example is CIMAC Online, how they are using technologies and be able to cater the growth, the spike of the 60%, 67% on the scaling part, and they are now able to providing the access to 500 schools across Indonesia, serving about 300,000 students and more than 16,000 teachers using their platform, right? Of course, this is need to be also similar to HelloDoc story, how they can actually expand the services, but at the same time, leveraging technology to innovate and driving down the costs.
Got it. My apologies. I didn't realize we have already shot well past our 1 hour time slot that we had. I'll try and ensure that we finish in the next 1 or 2 minutes. Gunavan, thank you so much. The other three panelists, quickly, just wanted to ask you, can you take a minute each and tell us what do you think are the biggest? We heard from Gunavan in terms of what some of the challenges are. Jonathan, can you just take in a minute, maybe explain, quickly tell us what do you think are the challenges that you face in sort of getting to the next tier 2, tier 3, and how can everybody come together, be it big tech companies like you, investors, startups, government, and address some of these challenges?
Joji, I think the biggest risk for us is ourselves. I think it's going to be the ability for us to, I think Umang mentioned a really good point on how to curate and to be able to serve these like very unique customer segments. But fundamentally, it's on our management team and our ability to scale. I think very beginning of this panel discussion, Gunawan also mentioned talent growth in Indonesia, our ability to build technical talent locally and to be able to scale and to drive that innovation. So I think absolutely it's on us, and that's going to be the biggest kind of hurdle.
Thank you. Umang, what's the biggest challenge for you? Is it building localized, customized solutions for each province, or what else? Is it talent?
I think talent is definitely a key execution risk, right? And I think scale, we have to customize the product, build differentiated solutions. For that, we need essentially local talent, local insight, and in being able to do that consistently at scale is a challenge, right? So I think that would be and related to that is the execution risk that Jonathan was mentioning.
Got it. Anderson, you spoke about earlier about the capital part. Be it a private equity firm, venture capital firm, when they invest in companies, they can't hold on to some of these businesses for long term. They have a required tenure to return the capital, and some of these businesses take a long time. Do you see that as a challenge, or any other challenge that you would like to add?
We're very lucky to have long-term vision investors. We all know that stock markets go up, stock markets go down, right? And it'll take many years to build a really iconic financial services brand that's here to stay for many years to come. And so we're very fortunate to say that our investors are very patient one at that. If I had to put my finger on one thing that's a big challenge going forward, is education, because our product is talking about the store of wealth for individuals, right? It's not a consumer, it's not a consumptive product. So I think education is key. And, for startups like us, we need to handhold local officials as well as regulatory and government bodies as well, because we can't go to these regions ourselves, be that the economics does not make sense. They're very far away, their earnings potential is not that high yet, and so it needs to be sort of like a public-private partnership kind of approach.
Got it. To all my panelists, we have 10 minutes past our hard stop deadline. Umang, thank you so much for joining. Anderson, great listening to you. Thank you for being part of the panel. Gunawan, great to have your insights, and as well, Jonathan. Thank you for providing the perspective from Gojek. And to all our audience, thank you for being patient with us. And I hope you enjoyed the session and that there are valuable insights that you can take back with you all.
Thank you.
Thank you.
Yes, thank you. Yeah, bye-bye, everyone.
Thank you. Yeah, so what an interesting panel, right? And thanks, Joji, for moderating, and Umang, Anderson, Gunawan, and Jonathan for joining us today. We think that the discussion really solidified our findings in the report that digital B2C solutions have really great opportunity across Indonesia, not just in the metropolitan cities. And of course, very excited to see where things will develop in the next 3 to 5 years. So for our next panel discussion related to the B2B solutions, we will move to another Air Meet room where we will be joined by our panelists and moderators. So I will see you there.